Welcome to my channel. This was a strong week for the broader Indian market, with Nifty Total Market delivering 2.61% returns for the week. We saw two particularly strong sessions on Monday and Wednesday, with the remaining sessions largely neutral to positive. This indicates that the broader market participation is improving and the market has recovered strongly from the recent weakness. The Nifty Total Market is now approaching its previous highs. If we see a convincing breakout from this region, it could potentially set up the next leg of the broader market rally. So, overall, the broader market structure remains positive. Now let's look at what is happening underneath the index and the factors supporting the move. One of the most important developments of this week was the return of foreign institutional investors. FIIs turned net buyers for 3 consecutive sessions. This is particularly important because domestic institutional investors or DIIs were selling during parts of this period. I have discussed this relationship before. When FIIs consistently enter the Indian market, particularly when the macro environment is supportive, it can become an important source of momentum for the broader market. On June 29th alone, FIIs reportedly purchased approximately 2,982 crore worth of equities. That was one of the strongest single day inflows since early July. And on Wednesday, we also saw FIIs and DIIs buying together. Now, one or two sessions don't establish a trend, but what matters is whether this institutional buying continues or not. So, FIIs inflows will be one of the most important indicators I'm monitoring in the coming week. Coming to sector and stock performance, auto and financial stocks were among the strongest contributors during the week. Mahindra was particularly strong following its quarterly results, rising approximately 2.8% on Thursday. Bajaj Finance was another important contributor. But the interesting part of this earnings season is the market's reaction to the results. Companies delivering strong numbers are being rewarded, companies disappointing the market are getting punished quite aggressively. And that tells us something important here. This is not necessarily an environment where blindly buying stocks because the index is moving higher will work. Stock selection matters, fundamentals matter here, and earnings expectations will definitely matter. Now, what is exactly the biggest problem in this current market? It is IT sector is still weak. While auto and financial supported the market, IT continued to remain a drag. If we want a broader and more sustainable Nifty rally, eventually we need participation from IT sector. From a technical perspective, I would not call IT bullish yet there are important resistance zones that need to be reclaimed. So rather than trying to predict the recovery, I would wait for the market to confirm it. If IT eventually joins financials, auto, and the broader market, the structure of the Nifty rally becomes significantly stronger. Until then, this remains an important missing piece. Now, I'll be looking from the macro setup, that is with respect to dollar, crude, and FII inflows. This is probably the most important part of this week's analysis. I have been tracking three variables together: the US dollar, crude oil, and the institutional inflows into India. Why? Because these variables are deeply connected to the Indian market. India is a major importer of crude oil. So, when crude prices fall, pressure on India's import bill and inflation can reduce. At the same time, a weaker US dollar can improve the relative attractiveness of emerging markets. Now combine that with foreign investors becoming buyers of Indian equities, that's where things become more interesting. This week we essentially saw a weaker dollar, easing crude oil, and improving FII flows. That is much healthier macro combination for Indian equities than the opposite scenario of a strong dollar, expensive crude, and persistent FII selling. This does not guarantee the Nifty will rally, but from a regime perspective, the environment has become more supportive. Crude affects India's macro environment, the macro environment affects the rupee and global liquidity influence foreign flows, and the foreign flows eventually influence equity market liquidity. That's why Brent will remain on my screen throughout August. Now let's move into the major events for the coming week. The first major event is the RBI Monetary Policy Committee decision scheduled for August 5th. The market broadly expects the RBI to maintain the repo rate at 5.25%. Therefore, the rate decision itself may not necessarily be the biggest trigger. The second major global event is the release of the FOMC minutes. The Federal Reserve kept rates unchanged at its July meeting. However, the messaging around inflation and future monetary policy remains important for global markets. For India, the connection is straightforward. A more hawkish Federal Reserve can support the dollar and US yields. The stronger dollar can put pressure on emerging market currencies and potentially foreign flows. Now, what is the other missing piece is the monsoon. So, monsoon is worth tracking, especially currently owing to the situation in Indian markets. August is an important month for rainfall. Monsoon progress has implications for agricultural production, rural demand, food inflation, and eventually monetary policy. So let's bring everything together. Going into the week of August 3rd to August 7th, my market stance remains neutral to bullish. but I want confirmation from the data. The bullish scenario comes stronger if Brent crude remains controlled or moves lower, the US dollar remains weak, FIIs continue buying, domestic institutions participate, corporate earnings remain healthy, and broader market participation continues improving. On the other hand, I would become more cautious if crude reverses sharply from here, the dollar strengthens, the bond yields rise aggressively, or FIIs return to the sustained selling. Thanks for watching. Please like the video, share it, and subscribe to the channel.